Hi everybody, it is the weekend heading into March week 4, 2020, and this is a quick video going over the weekly time frame chart for the S&P 500 and explaining how I arrived at this, in my opinion, conservative estimate for a downside target at 1890. So here is this chart that I've been posting for you guys for about 2 weeks, and this is a typical measured move chart that I'll happen to show you guys, where I draw a box around a range and then I duplicate the box or triple the box or whatever it takes to show you where the measured move would come to. That means I'm measuring a move from a high point to a low point and then showing what it would take us to double or triple that move up or down. So here's that weekly chart showing you this measured move point here using our high that we made in 2020 down to a break of the 200-week SMA, and to do a simple doubling down of that would get us to 1890. And then back here in 2008, we made nearly a triple down. We made a little more than a triple down of this measured move. And back in 1999 to 2000, we made a little over a double down of it. So by simply just doubling down this is conservative compared to what happened the last two times in history when the 200-week SMA was violated. When you look a little more closely at the chart, let's just literally do that. Here is a close-up version of that same weekly chart. You can see here our 50-week simple moving average is curling over. Our 200-week simple moving average is just beginning to flatten, and that's sort of the signal that it's going to curl over and fall down. That's sort of like the final nail in the coffin. I hate to even use that analogy right now, but that is sort of the final nail that really confirms that we will roll over and fall further. So last week, we broke down intra-week, because this is a weekly week. We broke down through the 200-week SMA, but we had that big rally on Friday to end the week that got us back above it. And then we came in this week gapping down below that 200-week SMA, and we could not even get anywhere near even intra-week at our high. We couldn't even get back to that 200-week SMA. And when we look back in the past, you can see this sell-off that happened at the end of 2018 that we thought was like the worst thing that we had been through in a long time. You can see this was driven right to the 200-week SMA, and we bounced off of it. And when you look back in time a little further, here was that sell-off at the beginning of 2016, the Jamie Dimon bottom. That didn't even quite touch the 200-week SMA, and we bounced off of that. And then before that, there was the sell-off that happened towards the end of 2011 when we had the budget crisis, and the S&P downgraded the debt rating of the United States, and we had this a few weeks where we were chopping back and forth above and below the 200-week SMA. But it's still there is no support in the market. There is no institutional buying to take us up off of this mat and bring us up higher. When we take a look at those moves that happened in 2000 and in 2008, here's a little more closer look at that. You can see here was, and I'm running out of time on my chart because my chart only goes back 20 years. So I'm in 2020 looking back at the year 2000, and with each day I'm losing more and more of the move. So this looks like I'm not drawing the move from the top of the move, but trust me, I am. So here was the move from the high to the break of the 200-week SMA, and then here the move doubled, and then here the move not quite tripled, but definitely did another half leg down before it recovered, and you can see how long it took to recover the 200-week SMA after that. Then when we fell in 2008, here is the move to the break of the 200-week. Here it was when it doubled, here it was when it tripled, and then it did another half leg down from there. So you saw 2.5 legs down here, you saw 3.5 legs down here, and I'm only talking about 1 leg down here with this target of 1890. I had a thought as well that if the time comes and we blast on down through 1890, what probably would be the last and final target is and 1890, as you can see, if we look to the left, that lines up with those lows that we made in 2016 for the Jamie Dimon bottom. If you look left a little further, you see that the next leg down would be this double top that we made at this last major break of the 200-week SMA. So in the end, it wouldn't surprise me at all if this move finally took us all the way back to point A, back to these highs once again, and that's where the buyers will truly step in and lift this market back up again. kind of driving it all the way back home. So this is a very important signal. Of course, we could come in and they could make me look like a complete ass next week, and we could recover and get back above the 200-week SMA. We could chop around a little bit. But I honestly think that until we rise back above this and put in some solid support for a good solid 2, 3 weeks, 4 weeks of closing back above it, it's not an anomaly. This isn't a freak of nature. This is the start of a move that's going to take us much lower, starting at 1890, and if worst case scenario, all the way down here to about 1570 to 1590 or so, which is where we double topped out in 2000 and 2007. Enjoy the rest of your weekend, and as always, good luck and good trading.